Good morning, good afternoon, and welcome to Provenier's first LinkedIn Live video panel. We're excited to have you join us today as we talk with some of our key industry leaders about their response to the COVID-19 crisis and how each of them are supporting consumers and small businesses as we navigate through the new normal. For those of you whom I haven't met yet, allow me to introduce myself. My name is Julie Manella, and I'm the Director of Sales for Pruvenier Canada. I'd like to take a moment to introduce our wonderful panelists and thank them for joining us today. Karim Manji is the CEO of Marble Financial and is an accomplished senior growth, strategy, product, and technology leader with a proven track record for building and commercializing world-class financial technology. Sue Krussell is the Director of Retail and Special Credit, responsible for all consumer lending for Meridian Credit Union. Sue has been with Meridian for 30+ years, with over 15 years in the corporate setting, supporting retail lending in adjudication and management roles. Irina Aramina is the Vice President and Head of Risk Management at Thinking Capital Financial Corporation, the leading small business alternative lender in Canada. Prior to joining Thinking Capital, Irina worked at both Scotiabank and goeasy. Tal Schwartz runs strategy and operations for the Canadian Lenders Association. During his time there, he launched the Canadian Lenders Summit, which is the largest event for lenders in the country. Panelists, welcome once again. A quick housekeeping item before we kick off. We will be taking questions at the end of the session. If we don't get to answer each one before the end of the hour, we will reach out afterwards. Without further ado, let's dive in. Tal, let's kick it off with you. We understand that you're having a lot of conversations with our peers in the lending community. Please tell us what you're hearing from them and what they're actually looking for in terms of support.
Thanks, Julie. So we actually have a weekly standing meeting with all of our lenders, which we affectionately refer to as our weekly therapy session. Between these discussions and our discussions with government, we sort of identified two overarching stages to the COVID crisis. Up until now, it's been about stopgapping cash flow and cash flow management. So the government's unlocked a ton of really powerful government aid programs that have been going into effect. And although there are still some serious gaps in the programs that they've given, for example, in one survey that we did, we found that a lot of our merchants, close to 40%, don't actually qualify for a lot of these government programs. Mm-hmm. But regardless, these programs have done a great job for Canadian borrowers and for the back books of the lenders that we represent. The second stage, which hopefully we'll be getting into in the next month or two, is what we're referring to as the restart and recovery stage. So this is basically once the government programs are over and there's a lot more risk on the table for banks that have been administering these government programs, they will retreat, and you're going to have a ton of underserved Canadian borrowers. And the way that you can make sure that these borrowers still have access to credit after the crisis is to support the alternative credit providers that were there for those borrowers before the crisis. So what we're recommending to government and what we're hearing from our lenders are things like allow these private lenders to participate in government programs like they are in Australia, the UK, and the US. Maybe introduce new public-private credit products to work with these fintech lenders and alternative lenders. Also accelerating the open banking discussions. That will do a tremendous job of bringing these alternative lenders back into the fold. And finally, making sure that these lenders have access to superior technology products that can go and de-risk their operations and allow them to start originating loans again.
Love that. Yeah, that open banking conversation, I know that you're also hosting a session in the next few months, so looking forward to hearing more about that. Okay. Now, these next few questions are for the panel. I'm wondering if you can tell us how COVID has affected how you do business today. How have you had to adapt your strategy since mid-March, or have you? Let's start with Susan.
Oh yeah, we have adjusted quite a few strategies, right down to whether it's to mitigate risk, whether it's because of key industries closing down, or whether it's because of the social distancing requirements. We are following and we've mirrored the guidelines of our high ratio providers so that it keeps us consistent in the marketplace. So how they're treating approvals prior to COVID and when they close, we've mirrored that for our whole book so that we are clear and transparent with our members. The bottom line is if we've issued an approval, we will honor it unless there's an absolute drop dead reason why we wouldn't, but we recognize people have firm contracts in place, and if we've approved it, we will fund it. We had to change our approach for appraisals, as an example, because appraisers can't enter the homes. So it's amazing what can be done with Skype and the homeowner doing a video, I guess, review of their home and using that in the appraisals. We've also had to move, of course, to working from home. So in the space of less than one business day, my team of 51, we're all deployed working from home. And amazingly, the technology has done an amazing job of being able to work from home. Everybody has their challenges. Some people have kids running around, others have husbands running around. But for us to be able to do that in less than a day was amazing. And technology has really made this transition much easier.
That's great. Yeah, I love the idea of that transparency with borrowers. I think it's important for the consumers to understand what they need to qualify so that they're not fearful. I mean, a lot of these consumers are, as you say, they're still buying homes. They're still pursuing, they need support through all of this crisis. And so having an understanding of what those measures are to help them support them through COVID is really important. And I love how you talked about this adjustment to leveraging technology. I mean, I think even with us today, trying to get this live LinkedIn panel set up, it was a little bit of a struggle for us. We were a little bit apprehensive, but it all worked out in the end. And you know, having that resiliency is definitely an important feature, and we're all demonstrating that. So kudos to us, I suppose. Wonderful. All right, sure. Anybody else have anything to add? I don't know, Karim or Arina, perhaps if you're adjusting to your strategies,
Yes, absolutely. Yeah. So we had to dramatically restrict our originations just to be careful, right? Being mindful that our customers are small businesses, and our primary goal was to be, of course, responsible towards them. Because overextending them during this period, as much as there will be that thirst for cash on their part, was fully responsible. So we had to be very, very mindful how we originate loans in this period, and to ensure that only the most sophisticated and most prepared customers can get it. Because otherwise it would be just unjust for small businesses to be able to just throw cash at them and ensure that they can survive through these times. So this, and of course, managing our current portfolio and what we could have done for them, so that would have been our focus. So we have to move away from growing towards what we can do for our existing book. So this is remaining our focus as of today.
Yeah, same for us on our side, Julie, was we really realized the importance of our technology team, because in a very short order, we're a small team, but all able to work from home in a relatively short manner. And I think our team was able to show how technology is a strategic enabler for us. We instituted a payment deferral program for our consumers as well. The federal government, alluding to what Tal had said, have also put in programs to give Canadian consumers a soft landing as much as they could during this time. So we found a lot of consumers were being very proactive during this time, looking for payment deferrals. But while we were assessing the lending part of our business, and waiting to see the ultimate fallout of COVID, it allowed us to reprioritize our roadmap, focus on some technology and software initiatives, and start putting a little bit more investment in other parts of our business that allowed us to focus more on the core. I think most companies have a lot of projects that are on the go that are moving ahead at 10%. But removing some of the fat in our roadmap that were potentially just nice to haves allowed us to focus on the must haves and reprioritize some of our roadmaps. So it has been a blessing in some ways, because it does allow leaders within companies to focus on the core of what our individual businesses are about.
Right, narrowing that focus. And it's interesting that you say that. I think a lot of organizations are struggling with adapting these changes into their technology platforms. Some of the organizations are these monoliths that just don't have the ability to pivot quickly. So, I think this is where the advantage is. And Tal, you had mentioned earlier that you're really encouraging the population to move downstream to finding these alternative vendors. And they're the ones that are really going to be able to adjust quickly and put these strategies in place much more effectively. And so it's exciting to have access to the technology and to the thought leadership.
Totally. And all I would add to that is, the big focus for us is this idea of continuity. So, understand, I think borrowers and lenders understand that this is a crisis that's happening for one moment in time. And they understand that, there are, blue skies ahead. And the role of Canadian lenders right now is to make sure that, they can continue to provide amazing services to Canadian small businesses and consumers the same way that they did before the crisis happened.
Right. Albeit differently. I think this is also, as Karim said, a moment to really hone in on and focus on what your roadmap is. So there's alignment there. All right, so the next question, we hear and read more and more frequently that there's renewed pressure to push for digital strategies, and this is kind of what we were talking to earlier. But how important was digitizing for you as a business prior to the crisis, and has COVID changed your approach to the digital agenda? If so, how? So Irina, did you want to start us off there?
No, absolutely, yeah. Well, digitization has always been very, very important, right? Being a fintech, this is, of course, is a forefront for us. Having said that, we use COVID right now as our opportunity to transform our business even further and faster. This is to echo Karim's point and Tal's points, right? This is to be prepared when we get out of the crisis to service our customers even better. Having said that, small business is very complex. Small business adjudication and origination. It's always been about playing that balance between doing things fast, but also servicing customer needs, because needs of the credit on the small business side is substantially higher than on the consumer side, unless, of course, we're talking about mortgages. And this is where it has always been very, very complex to fully digitize the process, because a lot of data, unfortunately, is still not available in a data format as opposed to paper or some other sources. And this is where we've been trying to find some inventive solutions in order to be able to service our customers much faster and better at the end of the day. So it's more about us understanding our customers rather than just being self-serving and seeing how we can do transactions fast and reduce costs at the end of the day. Also, to fulfill our mission supporting small businesses across Canada, this is not only digitization for ourselves. So now we're looking at solutions that potentially are going to support our customers at the end of the crisis, because digitization can service them well and support their business models. So this is us finding and helping them finding those solutions, how they can digitize their business models, diversify themselves, and therefore be way more sustainable going forward when they're going to get out of this crisis.
Yeah, it's definitely a unique I guess, pocket of the market that is still challenged with this digitization component. I mean, certainly further advanced on the consumer side. Hopefully we can see some forward movement during the COVID crisis. Like I say, I think we all now recognize just how important digitization is and hopefully we'll see some forward movement for the small business lending side. And Sue, how about you?
Well, we already have a digital online branch at Meridian, plus we have a digital bank as a subsidiary. So we were able to leverage a lot of those strategies to allow our members to continue to do business with us and not have to walk into the branch. What it has done is allowed us to really refine some of our more sub-processes. Whereas the sub-processes used to be a little bit more manual. I'll use for an example, deferred payments. We were able to quickly get those up and running via email, phone requests, even right through our online banking system for the first requests. So it allowed us to get more efficient, more creative, and still stay within the regulatory framework. So it's been interesting and worthwhile, because these are processes and things that we've implemented now that we will be able to continue to do, even, post-COVID is what I call the life after this, post-COVID. If we were able to do a deferral during the manner in which we're doing it now, why can't we do it a year from now and make it so much easier for our members to do some of the more basic requests? So that's the silver lining in all of this, is it's allowed us to really focus on key processes that give us the best bang for the buck in making it smooth, streamlined, and I'm back to clear and transparent. Everything has to be fully understood.
Right. I love that. That comes back to that transparency component. And again, I think that the Canadian population has really embraced the digital agenda. And so, as a community bank within the credit union space, I think that you're leading the charge in that area. So it's really exciting to see, that forward momentum within that real, the digital agenda. And what about for you, Karim? I know that you also have some really interesting tools that you've launched, and so want to hear how this is impacting you.
Yeah, so some of the words used by the other panelists, and silver lining, post-COVID, Tal referred to blue sky. This time, I think it highlights the fact that we are at a moment in time with COVID. The light at the end of the tunnel continues to get brighter. And post-COVID, the new normal also means new opportunities, new partners have surfaced. Projects that you thought were more important at one time are not necessarily as important. So projects internally that we have in terms of automation, integrating with other partners with additional alternative data sources, accelerating software projects, because the new normal also means that there's going to be new opportunities that you might have felt that were in the horizon, but COVID has accelerated some of these opportunities. So continuing to accelerate and augment our digital and automation strategies, helping us get what we want out to the consumer, but also the partners that have surfaced during this time, and how we can help them serve their customers as well. So digitization was always part of our culture, and this COVID crisis has accelerated some of these initiatives to a point where once we get to that new normal, we have an opportunity to be able to service our customers and our partners a lot quicker than we might have if this didn't hit us right square in the nose with COVID.
Right. I mean, Tal, this is kind of your area of expertise, is creating these alliances or these partnerships. So I think that speaks very, very well to having the support of an association like the Canadian Lenders Association. So love that. All right, the next question, as we talk about the financial recovery, where do you see the biggest barriers to getting ready? Technology, human capital? Karim, did you want to take this one?
Yeah, I think for consumers, the federal government has done a very good job of supporting consumers during this time. It's also very easy to see that the true fallout has not been realized just yet from the consumer standpoint. So for those companies out there that have lending as part of their repertoire, I know we're working closely with TAL and the Canadian Lenders Association, trying to lobby with the federal government to help companies like us be able to hit the ground running in order to be able to get back into providing credit products to our consumers. With Arena, with Sue, and other members of the Canadian Lenders Association, we all participate in this industry from a very specific standpoint and based on the consumer needs. At the same time, understanding a little bit more, especially when you're lending, we're starting to see a phased approach of businesses that will start to open. So a lot more Canadians will be going back to work, but a lot more are still, businesses have been hampered due to COVID. And so we don't know just yet what the new makeup is going to be for the companies that are out there. So investment in, I wouldn't say so much on the human capital side, but continuing to invest in the technology framework is going to be important for us, as well as the new partnerships that have arisen due to COVID. Some of them strengthened, some of them you realize that the new normal makes some of these partnerships not as forefront, but ultimately finding out what happens post-COVID with the consumer. And we help consumers from our corner of the world help get back into the mainstream economy. And so continuing to help those individuals participate, those individuals that are typically financially marginalized as it is, but COVID has increased that segment of the market, and to continuing to invest in programs and tools that can help these individuals post-COVID is going to be a focus for us.
Mm-hmm. I expect that there's going to be a lot of demand, so it'll be interesting to see how you scale to meet that demand.
Exactly.
Mm-hmm. How about for yourself, Sue?
Well, I'll build off of what's been said. Is the two things that kind of jumped out at me is the new normal. So I think technology is going to still be heavily relied on, digitization. The phased-in approach for getting the economy back up and running is admittedly going to take a long time. And I hope we don't have to take a few steps back, but we have to be prepared that we may have to slow down opening up again. I think some of the biggest barriers is going to be getting the Canadian consumer confident and able to get back out and spend money. If they're not out spending money, we're all going to have trouble with the businesses trying to get back up and running. Germany, when it reopened, the road or the streets, the stores stayed empty for a long time, and that is going to be a really key thing, and that we don't know. There's no modeling that we can do. We've never gone through anything like this, but I really think as things open up, will really dictate. And I think that's the toughest part with a lot of things is the business that we're in. We always want to do modeling and use what happened in the past and say, well, this is how it's going to look moving forward. We have no models. The closest we have is 2007, 2008, and this is nowhere near that. So to me, that's the toughest one.
Predictive analytics aren't going to help us today.
I don't think so.
No. How about for you, Arena?
Well, actually, very similar sentiment here. Definitely one of the biggest barriers will be to understand winners and losers at the end of this, right? And situation changes very fast, and as Sue says, like, it's not possible to predict. The data available, the past history, is definitely not indicative of what is going to happen, because just willingness to repay and ability to repay is not necessarily going to continue going forward as it was in the past. So biggest barrier will be for lenders to be able to pivot fast and be willing to service those winners. And also be able to identify who winners are, because we don't want what happened or something similar to what happened in 2008, where the biggest lenders have withdrawn from the industry and therefore were not willing to service specifically small business segment. And this is where it is our responsibility as alternative lenders, back to Tal's point, to fill in the gap and be able to be fast enough to help that segment of the population. Otherwise, the recovery is going to take much longer if everybody is going to be hesitating and not be able to pivot.
And how about you, Tal? Are you having conversations with the lenders about these particular items? I'm sure this is certainly a topic that has everybody. I mean, again, we don't have predictive analytics on this type of data, so.
Totally. So, well, I think another wrench in the chain here is, and you know, at a risk of sounding like a broken record, is these government programs, because not only do you, as a lender, do you have to build existing government programs into your data model, but you also now have to predict if or if not future government programs will be created, and will those affect your credit modeling, both for consumers and for small businesses. So there's quite a lot of uncertainty happening, and there are quite a lot of technology platforms that can help de-risk a few of those, or demystify a few of those elements. But I think what's key here is there's just still so much uncertainty in the marketplace, and you know, it's our job as a trade association to work with government to you know, bring a little bit more clarity, hopefully.
Yeah, clarity is definitely, again, who has the answers? I don't think anybody has the answers, but it's a matter of, we need to band together as a community, and events like this, which allow us to share this thought leadership, have these conversations, hopefully will help at least guide us down a path. So Rena, we're going to pivot this over to you on the topic of merchant financing. And what measures are you putting in place to support the small business community and help see them through? I know that we've had these conversations so far, but I think really just seeing them through to the recovery. Would love to hear a little bit more about your strategic initiatives.
Absolutely. So as soon as crisis became apparent in the middle of March, we anticipated that there would be a need to support our customers very differently. It wasn't as much about providing them dollar anymore, but more ensuring that they can have peace of mind. So in partnership with our lenders, we have prepared adjustment plans to provide payment reliefs. So we were looking at our customers and assessing the impact that COVID had on their business, and ensure that those who have experienced forced closure or dramatic drop of the revenue would have had access to those payment plans in a very, very prompt fashion. So large portion of our customer base needed those plans, and we're very thankful that we were able to give them a hand. So instead of suffocating them to continue providing the regular payments, we were able to adjust our relationship with them and give them what they needed in this difficult time. So it was very helpful, and a lot of them very thankful to us, and we're glad that we were able to provide that solution. Also, we're thinking how to pivot going forward, because those lending solutions that were very effective in the past might not be as effective going forward. So there has to be something new in the market that will help small businesses to rebound out of this crisis. So some older solutions though might be very helpful, like MCA loans, for example, but some adjustment might be something that the customers would be more interested in, because the revenue is not going to jump back to the previous levels as we just discussed. So revenue will start increasing gradually. So some kind of a credit solutions that are tailored to that pattern would be very, very helpful. Something where we will adapt to how customer is going to behave, how the world is going to behave, and therefore tailor for them instead of doing what is convenient for us. So this is something what we're thinking for going forward. Also, what I'm watching is their difficulty to survive through the crisis, right? Because before we were all in a growth mode, it was great times. But now it is becoming very apparent that the business model and how the business is managed from financial standpoint is becoming very, very important, especially going forward. So interesting thing that when we were looking at our data, we realized that we were able to predict those customers who are going to struggle during COVID and actually need the relief payment plans. So therefore, there is a pattern, there is a profile that we can identify and therefore use it as a benchmark potentially going forward, not only for adjudication purposes, but also to share with our customers and with small businesses as part of advisory to say, well, this is what successful businesses looked like during COVID. These businesses were able to survive through the crisis and remain afloat. So this profile is potentially something that you would be interested in learning about and therefore adjust your business model as well in order to be more sustainable in the future. So we're thinking to give that hand to the customers and provide some advisory solution and create even tighter relationship with them. So to go beyond lending and understand customers better, provide that help and have tighter relationship when we get out of this crisis.
That's brilliant. I mean, this is really taking a silver lining approach, is how do we best tailor our products and our services to our customer? And let's peel it back and identify, you said that the profile, so that we can help other customers who can move forward post COVID-19. And I know, you know, this is a question that I thought of and that you mentioned, is this new product development idea. Karim or Sue, I don't know if that has come up in your kind of your response to the recovery. Have you started working on any new products and as a result, or releasing any new products?
Irina brings up a very good point about looking at the situation, analyzing the data, looking at what worked for certain companies, what worked for other companies. And as we're looking at the data that we've accumulated, it's easy to see that also on a consumer level. Over the course of the last 10 years, it's been very easy for consumers to borrow and spend. And typically you see consumers go into a situation of a downward spiral as it comes to not being able to meet their debt obligations. And typically that happens because of a life event. It could be job loss, divorce, but who would have expected COVID to be one of those life events, right? So there's a situation here with respect to individuals and managing their credit during these times. We realize that the main issues around not being able to meet your obligations in a time of a crisis has to do with cash flow, has to do with budgeting. And so analyzing the data, looking at which consumers were able to potentially survive this period, because not all consumers are calling us asking for deferrals, some are. But most people have been impacted some way through their work environment or are worried about their work environment. So focusing upstream on cash flow, budgeting, personal finance. And so there are new products and ideas that we've been working on that some of them were on the table before in kind of the parking lot, and that's accelerated some of our initiatives and being able to launch those sooner rather than later. But absolutely, the data and what we're finding from the data is very key. So it's interesting also to see that Irina doing that on the business side of things, because there's a huge amount of learnings there too, I would assume.
Mm-hmm. Well, that's a very, very interesting insights. Now, Susan, I'm going to pivot to the Canadian consumer. We're expecting that, of course, many of them are going to be moving downstream on the credit spectrum. Calls for adjustments to your lending and your receivable strategies. So what plans are you putting in place today to ensure that consumers can gain access to the credit and lending products that they're undoubtedly going to need as we push through the recovery? And how does it align to your customer retention and customer loyalty strategies?
Yeah, it's right now, it's almost a treading water type of situation that we're in. We're reaching out to our membership via email blasts, information to let them know what they have available to them during, I guess, what we would call the core crisis time when we're in lockdown. So we are reaching out, making sure that they understand the deferral programs that we have and how they can best leverage them. We're also putting together links to all of the different government programs that are available, so that will help them. And that's really our focus right now. From there, we are also making sure that we try and get them to use the deferrals rather than fall behind, because that will ultimately protect their credit rating. And once we get past, I guess, the crisis, I see three buckets basically of borrowing Canadians out there. You've got we'll call it the lucky bucket, the ones that managed to get through this unscathed. They didn't get laid off. They're an essential industry. They're still working. Their household is financially intact. So for them, it's business as usual, and we can't forget about them. So they're going to be approaching the financial recovery a lot different than these other groups. The second group is going to be the group that was laid off, but are starting to get back into the workforce. So their job is there. They might be on part-time. They may have to transition up. For that group, I see a lot of strategies about getting them reset their financial path. So whether it's restructuring of debt, consolidating debt, getting them back onto the proper financial footing so that they can recover from this. The third bucket is probably the tougher ones, right? There are going to be a portion of Canadian consumers that unfortunately don't have their job to go back to. Restaurants are going to close, small businesses are going to close, and those we're looking to be tailored and individual for. We support the 6 months of mortgage deferrals, and we're up and running for them, but we do them 2 months at a time. So we're always in touch, constant contact with our members just to help them. So that as they move through the different stages of financial recovery, we're there every step with them, because we're talking with them and we're going to really customize solutions for them. Looking at new products, looking at new approaches. We've worked through the first gut reaction of we got to help people with deferrals. Now we're moving to education, and then we're going to move into the recovery phase.
Wonderful. So educate and segment. I love that. And I mean, that's a lot of what we're hearing is this focus on segmentation and putting in the right plans. And again, the idea of education and outreach. Canadian consumers are lost. I think there's just such an overload of information. So having the support of your partners at your banking partners is so hypercritical at this time. I mean, they just really don't know where to turn. So that's a great strategy to support. And I'm sure Arina and Karim, this is similar to what you're doing. As I say, I'm hearing a lot of what you're talking about is this idea of education and support. And that I know as well, Tal, you're putting a lot of content out on the Canadian Lenders Association website. So you know, but between the actions that you're taking, the information that you're sharing, it's critical to ensure that consumers and organizations have access to the right information.
And one thing that I would add to that is, in addition to having access to you know, financial literature, I think that right now it's so critical to make sure that there's accuracy in the financial literature that's being put out. And one thing that we're worried about from an industry perspective is we're seeing a lot of inaccuracies in the marketing of from certain insolvency trustees, basically suggesting that, you know, consumers that are under a lot of financial stress don't have to worry, they can just file for bankruptcy. And what we want to underline is that all of the lenders on this call have said is that, you know, your creditor is there for you and is going to offer you, you know, deferral options and will help you through this crisis. And because it's so important at the end of this, especially, we're likely moving into a serious, you know, Canadian economic recession. It's so important for consumers to have access to credit products. So So financial literacy is so important, and making sure that the literature that's put online is accurate, and telling consumers and small business owners what's in their best interest in terms of preserving their access to credit.
Oh, we couldn't have said it better, and that's a great segue into my next question with Karim, just talking about how consumers have found themselves unwittingly with credit scores that may have degraded due to these unexpected events like job losses or interruptions. So as I mentioned earlier, that I'm very aware of some of the tools that you've built to help educate consumers on rebuilding their credit. So how does this translate as they begin to move upstream again into Susan's world?
Yeah, so it's very interesting that. So from the lending part of the business, as most lenders were taking a wait and see approach just to see how things are going to unfold, but also revising their credit guidelines so that we can get back into actively lending and providing credit products, as Tal just mentioned, which is very important for a robust economy. We have found over since March and April that we have had a great adoption of our software product, which is a SaaS product called ScoreUp, which is an AI-based software that analyzes individual credit reports, leverages point deduction technology, and gives prescriptive recommendations to individuals on what they need to do based on individual accounts. So a lot of consumers have been calling us because they're trying to be proactive and they're concerned about credit degradation during this period of time. There is a lot of optimism for a segment of the Canadian population that believes that after COVID, that they will be going back to work. They want to be, or they do feel that there would be an opportunity for them post all these constraints. And so they're concerned about how to protect their credit standing. ScoreUp, what we found in there is a tool that helps individuals, prescribes recommendations for them on what they need to do to keep their credit. Our lifetime value of our customer typically on our lending product is probably 3 to 4 years, because our programs help the individuals rebuild their credit so they move back upstream into Sue's world and into the traditional banking sector. To the concept of new product development, we also find that a lot of consumers are online with respect to trying to borrow from Peter to pay Paul. And in a very short period of time, because of the credit score, there's not going to be very more Peters left, but Paul's still waiting for his money. And these individuals that are seeking credit and kind of impacting their credit score we hope to launch a diagnostic tool that will help these individuals and prescribe to them whether there's a restructuring with their mortgage or what they need to do, rather than looking for a loan, because in some situations, getting a loan is not the right solution for the consumer. And for lenders who are lending unsecured, it's going to be difficult for us to be able to offer credit to a segment of the population that is going to be impacted in Sue's third bucket. So those are the types of tools and programs that we're looking at. But we're finding that a lot of consumers are being proactive. And on the software side, they are very focused on maintaining their credit and looking for ways to help improve their credit so they can move back into the mainstream economy.
Mm-hmm. It sounds like it revolves. Everybody's made comment around this education and segmentation component, and I think that this is something that's very near and dear to my heart and my career. One of the areas that I was particularly focused on was the credit education to ensure that consumers have access to the lending products that they should be able to avail of. So.
Yeah. Can I add one more thing?
Yeah, absolutely.
On the topic of education and financial literacy, that is also a main topic, because most of us, regardless of where we fit on the credit spectrum, are relatively unsophisticated of the types of things that impact our credit. A lot of times it could be situations where something was not reported correctly, There's also this misconception out there that, oh, I pay off my credit every month. That doesn't necessarily give you great credit, right? So there's a science behind these algorithms from our credit information companies that work in collaboration with the types of accounts you have, what your payment history is, credit limits, frequency of payments. So educating these consumers on what they need to do, going into an insolvency is not the solution, as Tal mentioned. For a lot of customers, they come out on the other end into the brave new world, and for 6, 7, 8 years, they're in financial purgatory because there's no access to credit post that. So we have to be very careful on the types of products and solutions throughout the whole financial ecosystem what we're recommending to consumers, because each one of them have their own impacts to the consumer. So it's very important that the consumer is educated, and most of us are relatively unsophisticated about the impacts and what we do in our financial lives until you go to a Sue and say, I need a mortgage, and she may say, okay, Krim, this is impacting you negatively, and I may not have known. So credit education is very, very important for the consumer. So that's going to be, that is continuing to be a focus for us as well.
Demystifying the whole process, and you're
Yes.
absolutely right. It's just not something that most people have visibility to. They have access to their score, they have access to information, but again, going back to what we said at the top of the conversation, is this idea of information overload, and where do you go? What's the trusted source? So having reliance on your banks, having reliance on your financiers, that's critical for a lot of these consumers that are just overwhelmed with information, and they take the path of least resistance because that's what their friends have encouraged them to do or whatever. So absolutely, access to education, access to the tools and the strategies to help them move forward. So we're going to move on to the questions that are coming in from the audience. We did have a few, so I'm going to start out the first question that comes in. Any other examples the panel can share of best practices discovered by the COVID situation that will be kept after we go back to the new normal? Sue, do you have any insight or any feedback on that?
Well, like I said, we worked on our deferral program, getting that online and getting that a much quicker, smoother process. Off the top of my head, that is the big one right now. But again, that's, I think, the focus of everything right now that we're doing is streamlining it for the member and their needs in the current moment. And we're always looking at our digital methods, DocuSign, e-signatures. How can we improve the digital process so that people can borrow basically online and not have to attend a branch? So that's where our focus is right now.
Wonderful. And Dorina, how about you?
Actually, on a similar to echo Sue, it's about those digitization components that we have implemented fast during the crisis. So this is replacing potentially some manual pieces where customer wanted to, let's say, provide their bank statements in picture format. Now, finding the way how to reroute customer, encouraging them to provide it in a different format so that we can use it as data going forward and therefore service them faster. So all those solutions that move us away from traditional way of assessing credit, using manual human intervention more to the digital flow, all of those solutions are going to definitely service us when we get out of the crisis back to the new normal. Some of it will be testing waters, but some of it is going to be just proven solutions, right? Just having them implemented.
Right, and I would imagine as well your advisory solution is going to be sticking around again.
Absolutely.
Like, yeah, these are practices that are just very, very supportive of the industry. So that's great. And Krim, how about you?
Can I ask you just to repeat the question? I didn't hear it.
Absolutely. Any other examples the panel can share of best practices discovered by the COVID situation that will be kept after we go back to normal? So anything new, and I think that we've talked about this, but I still think it bears repeating.
Right. Yeah. So for us, our interactions with consumers, we're not a face-to-face contact company. So we're dealing with consumers from a distance, and alternative data sources, companies that provide information that we could leverage through technology. E-sign using tools like DocuSign is something that we were using already. But what are some of the ways that we can remove some of the friction points with the consumer? We were able to see through this process gaps in the process that we could further automate to make things easier for consumers as well. So I emphasize exactly what Irina and Sue said as well. Same situation for us.
Mm-hmm, mm-hmm. And Tal, I know that you're having conversations again with the community. So perhaps if you can also opine.
Yeah, so I mean, we've had an outpour of requests from our lenders asking this exact question, like, what are best practices? What are tools that we can look to? So we've actually recently launched an approved vendor program through the CLA, which Provenir is a part of. And it's really it's a tool for lenders to go and find just best of breed solutions for basically any one of their operational challenges. Of course, the questions that have been coming in have been focusing more around like credit servicing rather than new origination tools. But of course, that's going to change as the climate changes as well, and as the focus from lenders shifts.
The evolution post-COVID, understood. Right. All right. It looks like we have a question for Sue from Bharat Pokral, the Vice President at Home Trust. Sue, how are you going to handle deferred customers coming back for extensions?
That's a great question. I think we're really focused on this first 6 months right now. I'm expecting to hear more from our high ratio providers in the coming months. They did say that 6 months was their, I guess, the initial offering. So we will also gauge how they're going to approach things. We like to have consistency across all of our mortgage products. In the absence of that, at some point, if a borrower has availed themselves of 6 months of deferred payments and are still not in a position to make a mortgage payment, we'll work with them individually and see what we can do. It would be at that point pretty similar to any other borrower that has hit a rough patch. So there's a number of different options, whether we can capitalize and start over, consolidate debt if it's a total number of payments. But that is coming close to my third bucket of borrowers. That's going to have to become a very individualized approach, depending on what got them to this point. Is at some point, the unfortunate reality is we do have to start paying back our debt. So how can we do it without hurting the borrower or digging them deeper into a hole? So great question. I think that's going to get some more government involvement, perhaps. I hear rumblings that they are looking at more retail or consumer relief programs. Haven't heard anything yet. But then from there, we have a fantastic credit recovery department that is more focused on keeping people in their homes, and that's who we will leverage.
Handling consumers responsibly. Thank you. Gaurav Deep Singh Johar of the Digital Technology Risk Officer at BMO Financial Group is asking any insights on your digitization strategy and how you are speeding it. I think we did have that question did come up, but maybe just a quick recap, Karim, if you wanted to start. I know that you covered
So one of the things that we're also focused on is there's parts of our technology roadmap that we understand is not core to us, so we don't need to build it here. Leveraging third-party providers out there. I'll give Salesforce as an example, where we accelerated our migration over to Salesforce because of the benefits that it provided us in ways that we didn't need to customize, we could configure. And focusing our efforts on the user experience with our internal development team in terms of data integration, the user experience, and new product development. Integrations with our partners in the lead generation side are other ways to streamline the processing to make the situation very easy, the user experience more seamless for the consumer. So a lot of times consumers in the current environment have to enter information multiple times. They've shared information here, they get referred over to another partner, they have to re-enter that information. So looking for ways that we can make the process seamless. But I think for the most part, Julie, I agree that we touched on most of it earlier in the previous question.
Rena or Sue,
yeah, just to go a little bit deeper on previous answers. So definitely it's all about user experience at the end of the day and how to make it more seamless to be able to service them faster and better. And we are achieving it through combining multiple data sources. So we are focusing on finding the proxies for the components of adjudication by using multiple data components that are coming from different sources. So it's all about how to inventively review it, combine it, and therefore make a conclusion. So as opposed to having one standard flow for everybody, it's about, okay, for example, industry that our customer belongs to. It's not always coming from the credit bureau, for example. So if that information is not available on one data source, where else we can get it from, and how to standardize it and therefore still keep the flow as seamless as it's possible. So it's about finding those new data sources and finding the way to combine them in order to derive the same information as we did in the past using non-digitized approaches.
Brilliant, new and better data sources. I love that. And then of course, Karim, I got leveraging best-in-class technology providers. And Sue, anything that you have to add?
No, I think the digital process was evolving pre-COVID. Certain aspects of it accelerated in this time frame, but I think it's really pushing us to a faster track of alternate ways of doing business. The new normal is going to require it. So it's very much a work in progress, and it's moving a lot faster than it was 3 months ago, shall we say.
Right. Increased pressure. And Tal, what about you? Any insights or comments that you're hearing from your lender community?
Yeah, I think Sue, you summed it up really well. This wave of digitization was happening long before COVID hit, but it has kind of forced a lot of members of our community to accelerate their digitization incredibly quickly, and from a technology perspective, that can only be a good thing. When we return back to a state of normalcy, operations will be much leaner and much more efficient and much more nimble, and that'll largely be because of the very quick steps that lenders had to take during this unprecedented time.
Mm-hmm, mm-hmm. Well, COVID has done anything. It certainly has accelerated all of our plans. So, and made us hyper-focused, which is not always a bad thing. So everyone, this wraps up our first LinkedIn Live panel, and I want to extend my heartfelt gratitude to our panelists, of course, who are willing to share their time and insights with us. As a community, it's great to see everyone banding together, and our goal with this panel was really to impart some value to you, our dear partners in the lending community. Stay safe and stay strong. We're all in this together. Thank you.
Have a good afternoon, everyone.
Thank you.
Thank you.
Bye.